Hi, I'm Jaqueline P'ng and this is Evening Highlights. The ringgit rocketed higher today, boosted by a crude oil breakout and bullish trade numbers. Earlier, the local currency leapt the most in 17 years to 4.1832 against the dollar, before settling at 4.2175. The ringgit is up against the dollar for a third consecutive session after Malaysia reported stronger exports performance in August. The trade surplus at 10.2 billion ringgit is the nation's biggest in 9 months. Also boosting investor sentiment, crude oil inching closer to $50 a barrel on tanking production in the States. The ringgit also traded firmer against the Singapore dollar, crossing the 3.0 mark. Against the pound sterling, it's at 6.4521. Just this morning, it was trading at 6.6099. AirAsia says it has no knowledge of plans to take the company private. The carrier is denying a report saying a management buyout was on the cards. It says it is in talks with bankers, but only to partially finance its already announced share buyback plan and nothing else. The report comes at a time when the carrier's shares are languishing after plunging to their lowest level since 2008. Investors pulled out after Hong Kong's GMT Research questioned the carrier's accounting practices in June. Maybank Investment Bank's Mohsin Aziz had already dismissed the idea of privatization as improbable, even before AirAsia came out to deny the report. One clue was the fact that it was buying back 10% of its equity capital from the public. The second was the fact that the founders could have moved sooner.
When the share price was really low, meaning way below 1 ringgit per share, was hovering at about 79, 78. All the way down, none of the principal shareholders bought any shares, not even one. So for the news to surface right now, when the share price have already gone up by about 50-odd%, and only now want to buy, it kind of like doesn't gel well. So that's why we think it's improbable.
He adds that the buyout could cost 2.8 billion ringgit, so even if the news had some truth to it, it would have been a challenge to secure financing. Malaysian banks may have been cutting jobs, but hiring is still happening. True, there are less jobs up for grabs because of the faltering economic outlook, but voluntary turnover is still there, and that means opportunities.
Attrition rate, though, has come down, it is still there at 12%. So people are leaving. There are certain jobs which are in high demand still. For example, with the rise of digital banking, information technology. So IT roles are very much in demand. Sales and marketing is very much in demand because a lot of the functions within banks are also sales-based. Then your branch operations jobs are very much in demand. So because those are the jobs where you see high attrition as well. Similarly in customer service.
As for pay, Prasad is looking at a salary hike of 5.6% in 2016. This is from 5.3% this year. She says historically, salary increase for the past 10 years have always hovered within this range. But promotions are a different story, having dropped drastically over the past year. And in view of uncertainties, Prasad notes that employees are playing it safe and are now more willing to stay put in their current jobs. DRB Highcom's aerospace unit, CTRM, has renewed a contract to supply aircraft components to US-based aerospace system. The 4 billion ringgit deal takes CTRM order book to 9 billion ringgit. That will keep the company busy for the next 15 years. The deal, along with other secured contracts, are expected to give CTRM's revenue a significant boost.
Last year, I think it was established in newspaper. We are hitting about 680 million. Target this year we are looking at about between 18 to 20% increase.
This increase would spell higher revenue between 800 million and 900 million ringgit. Today's extended deal alone will generate additional income of about 200 million ringgit for the next 14 years. CTRM was previously owned by the Ministry of Finance. In 2013, DRB Highcom took over the company for 298 million ringgit in cash. CTRM makes aircraft parts for Airbus and Boeing in its facility in Batu Berendam, Melaka. No company is safe from cyber threats. Think discount chain Target, Apple's iCloud fiasco, or eBay, where associated costs ran into millions. And if the big boys can be breached, small businesses better beware. Jonathan Gunn has more.
Small is attractive, at least when it comes to companies and hackers. Smaller businesses tend to have weaker online security, and EC Council Malaysia says that's a big mistake. According to the cybersecurity firm, a data security incident in Malaysia could easily cost a small company about $50,000. And despite such incidents rising on a global scale, companies still don't get the full impact of a breach.
Many people don't realize this, right? First of all, you lose about a month's productivity. Okay. Because once you get compromised, right, then you give us a call. We would come in and try to rescue you. Let's take that as a, anything in 7 to 21 days engagement, right? So first you got to pay us, you have paid the consultants, you have stopped your work, you have lost customer confidence, you're not able to grow your business further, and then whether you recover or you don't recover.
Your brand is affected.
Your brand's completely affected. And your competitors will then ride on you and say that this company, can't even protect themselves. So why would you want to work with them?
He warns that cyber attacks could grow by over 35 to 45% per annum in the coming years. Malaysia's own Computer Emergency Response Team, or MyCERT, reported an increase of 12% in such cases last year compared. And up to September this year, the organization recorded over 8,000 data incidents, with cases of fraud and spam being the highest reported cases. On a global basis, Breach Level Index, an initiative by digital security companies Gemalto and SafeNet, reported a total of 245 million record breaches for the first half of 2015. Jonathan Gan, DHTV.
And that wraps up this edition of Evening Highlights. I'm Jaqueline P'ng. Thank you for watching.